Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MaidSafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 20th of July, 2018. Today I'm joined by my co-host, Mike. Let's begin. Welcome, Mike. Thanks for joining the show today.
Glad to be here once again.
Well, we're starting, as usual, with weekly roundup. Let's just have a quick look at the top 100 and the information up here at the top. We got market cap 273 billion, 24-hour volume at 15 billion, Bitcoin dominance 45.6%, Bitcoin still number one. Damn. Ethereum number 2, Ripple 3, Bitcoin Cash 4, EOS 5, Stellar 6. Stellar has zoomed past Litecoin this week. Litecoin number 7, Cardano 8, IOTA 9, Tether 10. Tether in the top 10. All right, let's have a look at the total market capitalizations here in the last 7 days. We've got at the beginning of the week about 249 billion. And the end of the week, 273 billion.
Flirted with 300. Flirted with 300 there a couple of times. A couple days back. 299 billion and change a couple of different times.
That's right.
Didn't quite get over it though.
See that spike there in the middle? That's just shocking though to me. I mean, that's where did that money come from?
Don't know.
That was my pocket change fund. I just thought, what am I doing with all this coin? I should just chuck it into the market.
Pocket change fund.
Yeah. That's a bit worrying to me, that sort of thing. And then you see this a little further on down, and it had a huge drop. It's like, okay, so somebody bought in a huge amount, and then they came over here and they sold a huge amount and took their profits out pretty much. I don't know. That to me is a bit worrying. People manipulating the market, that's what I think. But it's been a good week overall, so I guess we can't complain too much. Blocktivity.
Same old there.
BitShares number 1, strongly number 1. Steam number 2. Ethereum 3. So what we got there for the, 66,640 unconfirmed transactions. I think that's the highest I've seen it. Ethereum is a busy bee. Getting busier by the day. EOS at number 4. Still climbing. Not doing too bad. Bitcoin at number 5. Bitcoin Cash number 6.
That's kind of surprising that Bitcoin Cash is actually
gone
not
up
at it's not at 0% or like a minuscule fraction. They're all like some of them are starting to come up off their the no fractions and stuff. Of course, Bitcoin's been stuck at half max for quite a while, almost as long as Ethereum's been pegged. So
it's interesting to see that Dash, which is at number 7, is its activity is well below Bitcoin Cash, but you can see that it's got a lot more blockchain. It's about the same. So they've got about the same blockchain usage, even though Dash is a distributed proof of stake system. That's just a bit surprising to me that the activity is so similar, and yet Dash hypothetically should be, even though Bitcoin Cash is fairly quick. Dash I thought was supposed to be faster. Anyway, I find that a bit surprising. So, yeah, interesting. Bitcoin Cash has really scooted up. I mean, they used to be quite a ways down there, so not sure what's going on there. I guess maybe some people are getting interested. They've been talking about adopting some other technology, I think, to introduce colored coins or side chains or something. I'm not really up to date with what's going on there, but I think there's some activity, some things happening over in the Bitcoin Cash arena. All right, our next topic, the MaidSafe update. So this is the this isn't the right update. That's the 12 July update. What am I doing? I thought I had the right one pulled up there. Let's see if I can get it here. Where is it at? There we go. 19 July update. And now I'm at the bottom of the page for some reason because it remembers where I was at. Okay. Sorry about this, folks. There we go. Highlights of this week. So they're delighted to finally release their new website at safenetwork.tech. And if we have time at the end of the show, we might review that a bit. The website is a culmination of many discussions, as they've explained in this forum post. This is very much a soft release to the community before it's publicized more widely. Oops, sorry about that. It's not that we're widely watched, so no big deal. Please share any feedback you have in this forum topic. There's a link there. And if you find any typos, bugs need to be fixed. Yeah, there's already been a lot of activity there. I've contributed. A lot of other people have contributed ideas and thoughts and typos and so forth. So next point, this week they're ready to release a new version of the Safe client libraries with a new Rust API very soon. Expect more news tomorrow. The biggest change is the removal of the client struct from the Safe core and the introduction of a new client trait, which is implemented in Safe Authenticator as auth client and in Safe app as app client. This allowed us to only include core functionality in the trait and to decouple auth and app-specific functionality into the respective implementing clients. More importantly, this allows app developers preferring Rust, that's programming language, to depend on the MIT BSD license libraries only. I kind of wish they would, in these highlights, just try to make it more for the layperson. I mean, I'm happy that they go in depth in there later on, but I wish they'd keep it more layperson-ish at the top here. It makes it a bit difficult. I mean, it's like I read it out, but I don't even understand half of what they're saying, and I've got a little bit of coding background. So next point, as a follow-up to the Milestone 1 announcement, at BART, user BART was interviewed at Fergish, that's user Fergish, on Safe Crossroads episode 44. I'm putting a link to that podcast in the show notes, so have a listen to Fergish's podcast. It's always really interesting. So apart from Parsec itself and why its release matters, they touched upon topics about why MaidSafe uses Rust, why consensus is routing's concern, and what the job of a programmer looks like. So it ought to be an interesting show. And the last point, this week the routing team has started preparing specifications for Milestone 2 of Parsec. This is about implementing dynamic membership. Nodes may join and leave the network while consensus is ongoing. And we are also focusing on documentation, testing performance, and malice detection. Each of these aspects is crucial to making Parsec production ready for integration in the Safe network at Milestone 3. So that's great news. As usual, there's a huge amount of extra stuff in here: marketing, Safe APIs and apps, Safe client libs, routing, and Crust. And get into the development update if you want to know more. Okay, on with our news segment. Item 1, CoinMarketCap rehauls exchange listings in response to controversies over skewed volumes. So there was, let's see what they have to say here. Crypto price tracker and exchange ranking site CoinMarketCap.com is making major changes to its exchange listings method in light of concerns over skewed trade volume data, according to an official announcement July 19th. As of July 16th, the site has now removed the minimum volume requirements that it had been using to limit the number of exchanges listed on the site. So that's great news. According to CMC, this represents the first measure, among others, that will be phased in to address widespread concerns about the integrity of trade volume figures on exchanges. Although CMC says it transparently aggregates volume data based on access to the exchange's APIs, it acknowledges that several factors are emerging that may compromise its accuracy. These include a new transaction fee mining model recently adopted by some exchanges that reimburses transaction fees in the form of native exchange tokens. As CMC notes, this can pump volumes by making it profitable for users to simply trade back and forth to accrue more tokens, a phenomena compounded if bots are used to automate the action. CMC also mentions the extremely low fee models that are used to incentivize trading, noting that they often fluctuate and can be tiered by account type and transaction volume, a variable that remains opaque to both CMC and the users who consult its data. Lastly, the site notes that artificial volumes and so-called wash trading remain pervasive on certain exchanges, which often rely on market-making services or bots to trade native exchange tokens purely to maintain a minimum level of volume. Acknowledging the complexity of the problem, CMC that's CoinMarketCap, has begun to introduce more ways for users to filter volume data to take variations in fee models or other parameters into account. The site will soon introduce new metrics such as 7-day and 30-day listings to allow for better evaluation of volume consistency. CMC closely eyes debates and controversies in the crypto space, most recently acting to remove a Bitcoin.com link from its Bitcoin page amid heated allegations that the site was misleading customers into buying Bitcoin Cash instead of Bitcoin. In January, the site controversially opted to remove South Korean exchanges from its listings at a time when the Korean crypto frenzy was causing a notable price premium on certain coins, skewing the site's average figures. The recently rebranded 5-year-old CMC has seen stratospheric growth, reporting over 60 million unique visits this year through May. Yeah, it's been a bit bad, folks. There's a particular one that was brought up, a particular exchange that was brought up. I'm not going to name its name, but you can look it up. There was a brief study done by a third party that looked at different exchanges and was comparing the average unique visitors to those exchanges versus the volumes that they had. And one of the exchanges had just unbelievably crazy volumes. And CoinMarketCap was giving them, carte blanche to just, say, yep, we accept that as truth, And yeah, so there's a lot of manipulation in these markets, folks. This is why I'm a hodler, I just don't, because the manipulation it does affect everybody, even the hodlers, but it affects hodlers a lot less than active traders. And I think it's pretty scary stuff. And I don't know what the solution is here, but if I were, the CoinMarketCap leadership, I would be looking at every exchange and saying, well, if you're doing things that are going to cause manipulation, you're just out. I'm just going to cut you out. I would take a hard line with it. I guess they're trying to take a bit of more of a soft line with it and trying to, I don't know. Anyway, I'm not too happy about it, but not much I can do. Our next news item. MasterCard patents a method to manage cryptocurrency fractional reserves. MasterCard has patented a method to manage cryptocurrency fractional reserves. The big idea behind it seems to be that users will be able to pay with fiat on credit cards, partly backed by crypto assets, using a centralized system offering faster transaction confirmation speeds. Credit card giant MasterCard was granted a patent for a, quote, method and system for linkage of blockchain-based assets to fiat currency accounts, end quote. A disclosure from the U.S. Patent and Trademark Office explains it relates specifically to the use of centralized accounts to manage fractional reserves of fiat and blockchain currency updated via transaction messages corresponding to fiat and blockchain-based payment transactions. Explaining the need for the patent, the document states that, quote, blockchain currencies have seen increased usage over traditional fiat currencies by consumers who value anonymity and security. Cryptocurrencies offer consumers a currency that is decentralized and relatively anonymous and secure in its use, end quote. And such transactions, quote, may be highly desirable for consumers that wish to maintain their privacy and may help reduce the likelihood of fraud due to theft of their information, end quote. Sounds all good so far, doesn't it? However, quote, it often takes a significant amount of time, around 10 minutes, for a blockchain-based transaction to be processed due to the computer processing time and resources required to verify and update the blockchain, end quote. In addition, quote, it can be difficult for consumers to adopt or even understand blockchain currencies, end quote. And if a, quote, wallet is lost, discarded, or stolen, the associated currency that often cannot be recovered by the rightful owner, end quote. Thus, it concludes that, quote, there is a need to improve on the storage and processing of transactions that utilize blockchain currencies, end quote. And the article asks the question, MasterCard to really incorporate crypto? MasterCard has already acquired a lot of cryptocurrency-related patents before this. However, it does not seem to be planning to utilize the technology as no actual product or service has been developed. Asked about this, MasterCard Senior Vice President Seth Eisen explained to CNBC that, quote, we're consistently looking at ways to bring new thinking and new innovations to market to create value for us and our customers and cardholders. Patent applications are part of that process. Pretty generic so far. Oh, that was my addition. Then he goes on, taking steps to protect the company's intellectual property, whether or not the idea ever comes to market. Let's see, the article goes on. In fact, reports from earlier this year indicated that the company would only agree to facilitate fully regulated, central bank-issued, non-anonymous coins. If governments look to create national digital currency, we'd be very happy to look at those in a more favorable way. Ari Sarkar, co-president of MasterCard's Asia-Pacific business, said back in March, quote, so long as it's backed by a regulator and the value, it is not anonymous, it is meeting all the regulatory requirements, I think that it would be of greater interest for us to explore, end quote. So the article finishes with another question. Is MasterCard really looking to become part of the cryptocurrency ecosystem, or is it just hoarding patents for future legal battles? To me, it looks like they're hoarding patents. It looks to me like they are trying to, in fact, block the use of cryptocurrency and credit cards / debit cards. So what do you think, Mike?
Well, there's a couple of things that came up in my mind while we were going through this. The first was the cryptocurrency fractional reserves, and I know that fractional reserve banking is the top dog financial shenanigan machine that this world is currently afflicted with, and every central bank is up to shenanigans and stuff, and crypto was primarily designed to avoid that. At least Bitcoin was designed to, make a currency that you cannot mess with, and for the best part of 9 years, going on 9 years now, it's been doing pretty good. But, the concept that you can have assets backed by crypto, yeah, you can, but I don't see how that has anything to do with MasterCard and MasterCard's ability to do the one thing that it does, process transactions. They have the means to go and process the transactions of fiat currencies. There is no overlap. The way I see it for MasterCard, all they're going to do is process an authorized transaction through the Visa MasterCard network. And if someone else on the other end of the transaction, you've got the merchant side, and then you've got the transaction that goes to the bank side or the financial institution side, as the case may be. And as long as the money gets from the customer to the merchant, from one side of the transaction to the other, that's what we're concerned with. And MasterCard and Visa do a pretty good job of doing that. Now, the main thing that I see that this article refers to is in regards to the transactions, much like going and converting from, say, euros to dollars, or, if someone's on vacation from Europe in the United States, or from someone visiting from one nation to another that uses a different currency, they convert on the fly in a lot of transactions. Well, what this article seems to be to me is, MasterCard seems to be interested in trying to slap down patents that they might be able to go and use against companies that do the conversion on the fly from crypto to fiat, regardless of what fiat currency someone's using. And I would take great offense to a company such as MasterCard going and telling companies such as 10X or Monaco or some of the older ones that have been doing this for several years now, no, you can't do that anymore. And shutting down their rival before the traction is collected that drives that particular financial instrument and that financial transaction methodology off into a completely new realm of which they have no control and they derive no profits from. As it is now, with most people who have fiat going down to the grocery store to purchase groceries, or going to a gas or a petrol station to purchase gas or petrol, you can't just go and hand a card to most of those merchants. You can't do it. Now, companies like Monaco and 10x are working to make that a thing of that's the way it is now. You can go and load up your card. Some of them are preloaded cards, but you load up your card, you go down there and you use the Visa MasterCard network, of which Visa MasterCard get their cut. But the ideal situation, I would think, is somewhere down the road, there will be a crypto that creates essentially a little QR, or a register or some way that'll pop a QR code, and then you'll take like your smartphone, bloop, bloop, done. No Visa MasterCard, no payments to the Visa MasterCard 2% or whatever the agreed upon fee is. This is between the merchant and me, as it should be. No one else in the way between me and the merchant. And that, I think, is what this particular article is describing, is that particular thing. Now, the second part of it comes down into patents, and one of the things that was mentioned, patent applications are part of that process, taking steps to protect the company's intellectual property, whether or not the idea ever comes to market. There's many things in the patent legal arena. One of them they call patent trolls, people who buy up a patent and then they sue everybody who has anything even remotely similar to what their obsolete, nondescript patent, and they try and sue them to get money. And that seems to be a serious issue with patent law at the moment. And another one is companies that, say, for example, if someone was to, say, make a engine that on the fly produces does electrolysis, produces hydrogen and oxygen, and uses that for fuel to run an internal combustion engine. Well, if you can go and use water that you run the electrolysis and you can run a car on it, that would kind of like eliminate the need for gasoline. And I could see why oil companies might want to go and snatch up that patent and then make sure it never sees the light of day. And that, I think, is one of the worst parts of the patent system, is if you have a patent there, I would think that there should be a rule that you have to bring the thing that you're patented, you have to make a good faith effort to bring it to market. You'll have a certain amount of time covered by the patent, but if nothing is brought to market in a certain period of time, then that patent is now essentially open to the entire world permanently. All of a sudden, that patented thing becomes open source. You ignore it, it becomes open source, and anybody can use it, and nobody can claim patent rights. That would be a glorious way to do it. Bring it to market, or let it out into the open. You have no claims. You did nothing with it. You had your chance. Nope, too late. Window closed. And that's one of the other things that irk me about this particular article, is that the MasterCard seems to be, slapping down patents that, because of the way, of how broad some of these patents are listed. It's ridiculous how generic they seem to be, and how many other things that, while fundamentally, might be more or less fundamentally different, someone goes and, gets out their legal team and chases after somebody who has a better idea and is able to bring it to market. It's all about, profitability, but that all ties into my belief that information cannot be owned. It can't. Laws of nature. As soon as you tell something to someone, it's out of your hands. You have no control over the other person.
Fundamentally means, that patents themselves are fundamentally wrong.
Yeah, I would agree with that wholeheartedly. But that's just me, and that's not the laws of the society that has the most power in this world at this particular time. But since the one law of nature that they never ignore, which is might makes right, he who has the force makes the rules. That's basically what this world is at the moment, and it's unfortunate that the world can't be all volunteer.
Well,
but
maybe
that's a
there.
topic
we'll
for another time, I suppose. But what's the next one?
Well, before we get to the next one, I wanted to add that there was another article out this week about Barclays Bank, which is a pretty big commercial bank in the UK, but it's international, and they're patenting a lot of blockchain related stuff, and that's what the article is about. But just in general, over the past couple of years, banks have been involved with patenting a lot of blockchain area, a lot of the blockchain, kind of future things. They've been getting patents left, right, and center. They have hundreds of patents now. So this isn't limited to MasterCard. I mean, to me, I'm going to, if I got any MasterCards in my wallet, I'm going to be cutting them up because that just ticks me off a huge amount because I know what they're doing. They're trying to block other companies from linking crypto to their cards and stuff because, or if they do, maybe they'll go and ask for a fee, but I suspect they won't. I suspect this isn't about licensing out the patent. I suspect it's all about blocking groups from using it. And why would they do that, really? Because it helps their business, right?
So no, they're doing all this stuff out of panic, abject fear.
Well, I think it shows their link to the banks, right? Because MasterCard itself is just a company, right? And they get their funds from actually transactions through the card. So there's no harm from their company's profit perspective to allow crypto to link up to it. So why are they scared?
Well, they're scared
because the same people who own MasterCard are actually the same people who own the big banks.
Yeah.
And they're the ones who are scared. So I just wanted to make that clear. What's going on here. This isn't strictly linked to MasterCard or Visa or any of them. It's the big bankers who own so much of everything these days, and their control is, they just got control over thousands of companies, and they're using this to lock crypto out because of, they know what it
is. Yeah. And that's the way that I figure it is that they're panicking to the nth level of magnitude, because they realize, it's just like I remember it being said. I don't recall exactly where I heard it and stuff, but they go and say, banking is necessary, banks are not. You don't need a bank with the crypto and with blockchain and the distributed ledgers. You don't need a bank. You can go and with the Ethereum and the smart contracts and everything else, you don't need lawyers. Past a certain point, minimal need. But once you get it put into the smart contract, you can transact and have on a blockchain ledger, unchangeable, all the details of any contract that you want to put together.
You don't need judges to adjudicate the contract in the end, because the contract takes care of itself in that regard. If you
does.
Try to, so you're still going to need a few lawyers to write up some of these contracts.
Yeah.
But those lawyers are also going to be coders. And
that's what I was going to say. Or they're going to have a team of coders. Yeah.
Once it's written and it's open source and it's out there, then you just pick the one you want and you apply it. So you're going to need a lot fewer lawyers, and they're going to be coders, and you're not going to need the judges anymore. So the whole system, it's turning everything on its head.
Shift.
The way it's been.
It's a paradigm shift. So, but the next one is study finds cryptocurrency rebalance portfolios outperform hodling. Tell us more about it.
Well, this may have been I'm not sure, this may have been a sponsored article on Bitcoin.com, but I found it really interesting. So it's talking about this shrimpy cryptocurrency portfolio management platform. All right, so that I don't care about their platform, whatever. But I thought what's interesting here is a rebalance portfolio. So I'd never heard of that before, and once I read into it, I go, oh yeah, of course I understand what they're doing. But what's interesting to me here, so let's see, they did a bit of research on it, and they found that rebalancing beats hodling by a median of 64%. And so they used a variety of data to help determine which investment strategy is more profitable. Now, again, this is a company that does rebalancing, so take the data at with a grain of salt there. I don't know, but two major relations can be drawn from the study. The first relation is that increasing the number of assets increased the performance of a portfolio, and the second relation is that decreasing the rebalance period, increasing rebalance frequency, increase the performance of a portfolio. Therefore, the ideal portfolio was rebalanced frequently and also contains numerous assets. Now, I got to step back and explain what is rebalancing, because that maybe you could confuse that with just trading. You could think, oh, what does that mean? So rebalancing means that if you have a portfolio that say you hold Bitcoin at 50%, Ethereum 20%, EOS 30%. So you have those three things at those percentages. But then if EOS goes up in value by, say, it doubles in price, so that now your portfolio doesn't have the same percentage. It's been skewed because the price changes. So what a rebalancing portfolio does is if EOS went up a huge amount, then it would sell some of that EOS until you had back to the 40%, or say 20% overall. And it would then redistribute amongst the other two that you held in your portfolio. So you select the assets you want in your portfolio, and you select the percentage of each you want to hold, and then a rebalancing portfolio automatically adjusts to keep those percentages the same, no matter what the prices do. So, well, that's really interesting. That's a pretty fascinating way of trading. I've heard of that before, but I hadn't really thought about it so much. And if their research is right, and again, take it with a grain of salt, because this is what Shrimpy does, is they have a rebalancing portfolio system on their site, so you can sign up and you can do that with them. But yeah, so they've got some interesting things here. So they've got now, of course, this is a portfolio that they've selected, and who knows, maybe they could easily pick ones that would have given these statistics. So again, take it with a grain of salt. 10 asset portfolio with a 1 hour rebalance period outperformed HODL by 234%. Their experiment also compared portfolios that hold 10 assets but have a different rebalance period, which showed some interesting statistics. If you randomly selected 10 assets and rebalanced at least once a month, you would have had a 99.75% chance of outperforming buy and hold over the last year. This is truly incredible. Yeah. So now look, I got a little chart here: 10 assets, 8 assets, 6, 4, and 2, and you can see 1 hour, 1 day, 1 week, 1 month. Looks really amazing for the rebalance with a larger asset pool at a high frequency of rebalancing. Whether that would really hold if you just went in and randomly picked assets, I don't know. They may have just picked assets that fit what their model is. So again, always with a grain of salt. Always do your own research. But what to me was interesting was just the thought of this rebalancing portfolio, because as a hodler, I kind of am always kind of rebalancing a little bit myself, but this just seems if it automatically does it, that could be kind of cool. Anyway, do you have any thoughts on that, Mike?
It's kind of an interesting concept. For me, I'm generally not the type that will go and try and time the markets, mainly because of an article I read way back in the day, that talked about, the people who buy and hold generally do better than people who try and time the markets as they go up and down. So, I've found what happens when I try and time the markets, and, for the most part, it's a matter of just trying to hold what I have. And if we have a situation where we have a new investment that we want to go and put some money into, go and find out the reasons why we're putting the money in the first place. You have to be able to answer your basics. Why am I putting this into this particular asset? Why am I buying this coin? What does the project do? Who's on the team? What's the current value? What do I think it's going to? And how does the current price and my targets fit in with my current investing strategy? And once I've got all that answered, then I'll go and make the purchase of the asset, and I already know what my exit's going to be and how much is coming out and whether or not it's going to turn a profit. Then have my stop in case it doesn't do what I want it to do. I know when to bail out. I'm not going to go and hold it until it plows into the dirt. Oh, it's not worth anything anymore. I'm not going to go and do that. But, I know how much I'm willing to go and risk. I know how much I'm willing to go and lose. And if everything goes as expected, I can ballpark how much profit there's going to be in there. And, our old associate Jason, the way he would go and do stuff is basically pulling percentages of the increased value out as it went up until you've completely replaced your original investment plus your preferred profit, and you'll still have coins left over or shares of stock or whatever you happen to invest in. And at that point, then that can go to zero and you still haven't lost any money because you've already pulled out your original investment to go and hold into whatever your holding asset is until you get ready for the next investment, which you're always out looking for, other investments, other projects that really inspire you. And that's what you run with. So as far as for this, I don't, I'm the type of person that would prefer to keep my money under my control as much as possible. And I'm not a person who would go and typically feel compelled to let someone else manage my money for me. I think I've got enough knowledge and information to be able to make my own investment decisions. And some people they aren't. And this may, this rebalancing may be, something functional for someone who, isn't as confident with their financial investment abilities as we are. So, take it with your grain of salt or pepper.
I think it's all, definitely. If you're going to put your money on anybody's platform, basically hand your money over to somebody else to manage, then always be very careful about that.
Yeah.
I just think the whole idea of rebalancing is kind of interesting, and it's something to think about when you're doing managing your own money. It's very interesting.
It's a form of money management. Yeah, it's a form of money management. And much like dollar cost averaging investing, it roughly translates to, another track towards investing that would be similar in a lot of respects to, the dollar cost averaging. Keep buying on a regular basis and eventually you accumulate quite a bit. So. All
right. Our last news article this week. 2018 Crypto Investment Report. Institutional investors provide 56% of capital inflow. The first ever crypto investment report released July 18th by digital asset management fund Grayscale Investments reveals that the majority of capital inflow this year is coming from institutional investors. Grayscale has been overseeing investments into crypto for 5 years, launching a Bitcoin investment trust back in September 2013, and then expanding to other single-asset funds, including Ethereum Classic, Zcash, and Litecoin, as well as diversified offerings, notably its digital large-cap fund. According to this week's report, institutional capital accounted for 56% of all new investments into Grayscale products during the first half of 2018. Despite the undeniably bearish picture for crypto markets during this time, Grayscale remarks that counterintuitively, the pace of investment has accelerated to a level that we have not seen before. Total investment through June 30th, 2018 was almost $248 million, the strongest ever fundraising period since 2013. $9.5 million in fresh capital has been incoming every week on average, with $6 million, 63% going to the Bitcoin Investment Trust. In addition to the institutional investors who occupy the lion's share of Grayscale's portfolio, their investor profile data shows that accredited individuals account for 20%, retirement accounts 16%, and family offices 8%. Of these, roughly 64% of all new investments came from within the United States, 26% from offshore investors, and 10% from other regions. The average investment sum was $848,000 for institutional investors, $553,000 for family offices, $335,000 for retirement accounts, and $289,000 for individuals. The report qualifies these figures by noting the data is skewed by several large one-time outliers, as well as sums that were broken up into multiple allocations over a series of days. Grayscale's report suggests that major investors potentially consider the year's downturn as a prime moment to enter the crypto markets, moving in to buy the dip, just as infrastructure to facilitate institutional entry is materializing. This week, we saw significant news in the $6.3 trillion asset management heavyweight BlackRock, the world's largest provider of exchange-traded funds. They're beginning to assess potential involvement in Bitcoin, stoking considerable excitement from industry stalwarts and possibly bolstering an impressive market uptick. There's been conflicting news for BlackRock. I wouldn't say that they're getting ready to jump onto the bandwagon yet, but certainly everyone's looking at it. Everyone's looking at blockchain and what's going on in the crypto markets. I just found this interesting that with regard to this particular company, Grayscale Investments, that a huge amount of their input is coming from institutional investors, and I think that's a positive news front. It shows that there is quite a bit of demand on the institutional side. They just need really vehicle to get involved, and as more of those vehicles come available, there's a lot of groups now, companies now working to make products available for institutional investors. So as those come available, I think what this report shows is that we're going to it's not just a speculation that if you build it, they will come. I think the data is pretty much there that as they're building it, they are coming. So I think that's very positive, really, for the whole blockchain space, for the whole crypto space.
Yeah, it's definitely going to be interesting as time goes by and the barriers to institutional investment, become less and less. It'll be interesting to see when the eventual upsurge happens to where we start seeing the total market cap start an inexorable rise. Because one thing that people notice is year-over-year profitability. And if you get into a situation where year-over-year you look at the profitability and no stock, no financial instrument, comes close, some people say the risk is what they perceive as the risk is worth it. And FOMO kicks in, fear of missing out. And that tends to drive things like last December and January, where you get crazy rises in prices, irrational exuberance, as they once said back in the day, when you end up with vertical lines of values that inevitably, when something goes up and the market gets overheated, there's times when, it turns around and crashes. But then there's other times when the rise continues on year after year after year. And when the correction does happen in relation to the total rise, it's sometimes minimal. You go ask anybody who decided to go and buy Microsoft stock in 1986, if what their thoughts are on, what was it on the 1987 during the 500-point Dow crash and stuff? You lost a big chunk of your value. Yeah, it was still higher than what I bought it at, even after the big reset, even after the big profit taking, even after the big crash, and it continued to go up. Just like Bitcoin, in 2013, it ran, the first time it ran up, I remember the first time it was due to a Bitcoin Ponzi scheme. And the price of it ran up to about $33, $35 and proceeded to crash as far down as $3.50, $4, after a ride up to, the 30s. And then in 2013, I rode my $30 Bitcoins, watched it go all the way up to 1,200 due to the Mt. Gox shenanigans. Again, more reason to keep stuff under your control. Mt. Gox went and exploded, went and boom, and price plummeted down until last year. when it proceeded to go from the lows of 200 and stuff last year or the year before in 2016, 2015, or no, 2016. And it rose up, and eventually, 2017 came around, 600 went up to 1,000. And, by January the next year, it was up to 19,000. Now, granted, it's not there now, but if you still had, the investment in, March, April of 2017, you bought it for maybe $1,000. It's at $7,700, $7,800.
You're doing
so
well.
it's like, okay, yeah, it's not at 19,000. Yeah, it would have been nice if I'd have sold some then, hodler, waiting for it to be 100,000. What's your exit? How much are you planning on making on this? Well, I'm going to buy my stuff for 1,000 and sell for 50. If that's what someone's going, they don't care that it went for up to 19,000 and went back to 6. They're not concerned because they have their target and they know where their exit is, and they know that it's going to be a waiting game. If you have confidence in the market, then you'll be able to weather the storms and whatnot. It's like us with MaidSafe. We went and bought MaidSafe, shortly after its ICO, and we've been sitting on it ever since. And are we going to sell MaidSafes? No. Are we going to sell safe coins? Yeah. But we know that the team, we have confidence in the team. That's part of why we do the show. And we understand that the safe network is something that it's going to be, it's the new internet. And as much of a change as the internet has caused in Earth and all of mankind, this is something that the price that it is now, there's going to be people who say, man, I really wish we would have got some of those.
Yeah.
And that's why we're here.
Looking at their website now, their new website, safenetwork.tech. And have a look. At the very top of it, we're building the new internet. Freedom of expression, control of personal data, private and secure communications, and a whole new economy. Welcome to the Safe Network.
Can't be censored or shut down because it's autonomous. A safe network can't be turned off, blocked, or controlled. It belongs to everyone. The glory of freedom. And
there's a lot of good bits on this new site. They've got it really broken down for the layperson to read. So I really recommend people have a look at it.
If it's designed right, which I think they're setting it up to be designed right, people just mess things up. People are a mess. Properly designed code isn't. Maybe that's just my inner coder going and talking there. It's like you get all the bugs worked out and you get your code working, the way you see it is the way it's supposed to. And I'll tell you, it's a thing of beauty. Seeing a good program that's working, doing everything. If you properly bulletproofed it, it's going to be a thing of beauty. And I cannot wait. I cannot wait for this to come about. It's going to be a day I'm going to be dancing, not out in the street, but I'll be dancing on the sidewalk next to the street. Why are you dancing? Because SafeNet is up. Dance, dance, dance.
Yep.
Yeah, I'll be the Tauren from World of Warcraft doing peanut butter jelly time. It's the only dance I know. But it'll be my dance. That's my dance. I'll go make a little meme of myself going and doing my dance. But,
we'll have to make a video.
That'll be interesting. I'll go and paste my face to the peanut butter jelly time Tauren doing that. When Safe Network is up and running, I'll have to go and look forward to that. But anyways.
All right. Well, that's all we have for today, folks. I'd like to thank our viewers and my co-host for joining me today. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. Tune in next week for another interesting episode.
Smash the like button and subscribe.
Bye-bye.
Catch you later, good peoples.